who's ever the chairperson of the SEC, whatever the regulations are, will follow.
Mhm.
When we started, it was when Clayton was the chairperson of the SEC,
Right.
and he was a Trump appointee. And essentially, he was the one who came out with the special purpose broker dealer release.
Mhm.
So, whatever the regulators say, our whole position has been we'll follow it. That's why it has taken us arguably a long time because regulations weren't clear. And you have to work with the powers that the actual regulators in order to make sure you obtain the licenses if your belief is that's the way to do it compliantly.
This content is brought to you by Uphold, which is a great crypto platform that I've been using since 2018. Uphold has all the top cryptocurrencies, Bitcoin, and all the altcoins. In fact, they have 260 plus cryptocurrencies on their platform. You can also trade precious metals, stablecoins, and 37 fiat currencies. In addition, they are available in over 150 countries. And this platform is fully reserved. They do audits, so you can trust that your funds are safe, no commingling, no lending out your funds. If you'd like to learn more about Uphold, please visit the link in the description. Welcome to the Thinking Crypto podcast, your home for cryptocurrency news and interviews. With me today is Aaron Kaplan, who's the co-CEO and co-founder of Prometheum. Aaron, it's great to have you on.
Hey, Tony, thank you for having me.
So, Aaron, big news around Prometheum. There's a big launch taking place. I have a lot of questions for you about your services and much more. But before we get to Prometheum, tell us about yourself, where you're from, and what's your professional background.
So I am from New York. I grew up in Westchester. My background's in financial services, and I am classically trained as a securities attorney, which was obviously very interesting and useful in doing what we're doing. And since essentially, I believe 2013, I'd focused my securities practice on the application of distributed ledger technology to the securities industry and really the related regulatory issues. Now, at the time when we first started, people weren't necessarily considering the sort of the crossover between what at the time was Bitcoin, then became virtual currency, and then became sort of smart contract enabled network tokens, then just expanded from there. And they weren't considering the implications from sort of a regulatory standpoint. But essentially, since we got into the space, since reading the Bitcoin white paper, and really believing in the technology, we had focused on sort of the best way or a proper way to allow for participation, meaning trading, clearance, settlement, custody of the general public in the space. And we initially wrote a no action letter to the SEC in April 2014, asking them to allow us to transact Bitcoin as a security through an ATS and a brokerage account. And the whole idea there was that the federal securities laws provided an excellent framework to allow for participation in the space that would allow the general public to be properly protected. So from there, that's where we started, and we went down a deep rabbit hole.
And what was your first encounter with Bitcoin? I'm always curious about folks' history and story about when they first encountered Bitcoin and what was the aha moment for them.
When reading the white paper and going into it, and listen, I'm a securities attorney. I'm not an engineer. Anybody who doesn't have a deep engineering background or even had, a CS major, you can only go so far. But you can understand that there was a lot of potential to innovate how data and value was transacted on a blockchain as the basis for that. But essentially, so after reading that, it was sort of a aha moment, like, oh, this is going to change how securities operate. Because the thought is like securities, if you look at the history of securities are initial paper securities, make certificates.
Mhm.
They transfer, like eventually they transition to electronic sort of trading, which is basically a electronic representation of a physical certificate, but it's still based on the physical certificates. But
Mhm.
the next generation beyond that is to be pure digital, meaning having the asset issued on chain and transferred on chain. And overall in the security space, the idea is sort of like the holy grail is instantaneous settlement, a T0. It just eliminates a lot of counterparty risk. So the thought process was, by integrating the benefits of distributed architectures into market infrastructure, what you could achieve is really the holy grail of markets, meaning, instantaneous settlement and basically the ability to trade, clear, settle, and custody on a blockchain was the goal when we started the company. And as I mentioned before, we wrote our first no action letter to the SEC in 2014. It was a little bit progressive in its thought, and nothing became of it. But since then, I focused my practice in the space, and as the different technologies developed, as you had smart contract enabled network tokens come out, initially with the ICO boom and the like, there was a conflation between what I saw as an opportunity between the technologies attendant to virtual currencies and sort of how markets worked. So while I'm not the biggest Bitcoin person, I do believe in a lot of the smart contract-based network tokens and their viability as a means of processing data, and think that the conflation between those technologies and markets is really the future of where everything's going.
Now, given your securities background, and we see the talks of tokenization and putting stocks, bonds, real estate on the blockchain, and the ability to do that is because of smart contract technology. What is your outlook for the future of securities? Do you have a timeline for when we see all these things tokenized? You have like Larry Fink at BlackRock talking about it, saying it's a future of finance, and is Prometheum trying to position itself to be able to meet the market needs there?
So Prometheum is sort of interesting because it allows for potential disruption into different parts of the market. So on the virtual currency side, the idea there is just basically what people call virtual currency, and everything besides for Bitcoin, arguably, we view as a investment contract that is a digital asset security. And basically, you're able to treat and trade, clear, sell, and custody of that asset by providing the benefits of the federal securities laws such that investors are protected. So that's one side of the market. But what you're referring to on the other side, which I think is like a big driver of future growth, is this tokenization idea. So when you think about tokenization, now there's fringe cases, so it's not 100%, but tokenization is arguably securities on a blockchain. And when you see people like Larry Fink, and you see people, the big banks talking about how tokenization, meaning securities on a blockchain, is essentially a $1 billion market. I know that's not a word, but they say crazy numbers. They're talking about trillions of dollars, right? And that is, I think, what will drive a lot of the future growth, the institutional adoption, the institutional participation, because it really provides a mechanism by which institutions could arguably generate compliant revenues in the space. If they could issue a security on chain, they know it's regulated, there's no regulatory compliance issues, and basically now they can sort of transition their business away from traditional means of sort of creation of securities, trading, clearing, settlement, custody, to on-chain activity. And now that they can generate revenue from it, there's significantly more interest. But if you take it a step further, like people talk about tokenization, but in order for tokenization to be empowered, tokenization is the creation of the asset, but you need to be able to do things with those assets thereafter.
Yeah.
I mean, if you can't do anything, it's illiquid, there's no public market trading, there's really no activity, right? So what Prometheum does is basically everything after the asset is issued. We then provide a public market infrastructure, meaning an ATS for digital asset securities that can publicly trade digital asset securities, I should say, which means that there's depth of market, there's liquidity, it's real trading, right? But in order for that to occur, like, you can't have public market trading unless you could also do what occurs after the trade is made, meaning clearance, settlement, and custody. And we've, through our special purpose broker dealer, have the licenses and the authority to do those activities. So basically, in that sense, we can provide a sort of a infrastructure that will allow tokenization to take flight, actually meet its potential, because the asset could be created and then it can actually be publicly traded, cleared, settled, and custody, meaning everything else that has to occur to really allow tokenization as a whole to move forward, which we're very excited for.
Mm. And you guys have a FINRA approval to clear and settle digital asset security trades along with custody. And then the big news, which folks are going to hear about, is the Ethereum custody launch. Tell us about the FINRA approvals and the Ethereum custody launch.
So I believe it was in December, Prometheum Capital, which is our special purpose broker dealer, received the approval to clear and settle digital asset securities. So when you think about markets, you have a trading venue and you have a custodial venue. And what occurs in between, and this is a very simplistic, explanation, is the clearance and settlement. So we had the ability, I think we received the license for our ATS with Prometheum ATS in 2021, and we received our special purpose broker dealer in May 2023, I believe. But in order to do that piece in between, clear and settle, and really have the ecosystem as a whole make sense, you really had to have that final approval. And once we received that, now basically we have the approval to have an end-to-end blockchain-enabled ecosystem for digital asset securities. Now, and really overall, that's the last approval Prometheum needed before we could launch this whole ecosystem and really service the entire life cycle of a trade. Now, one thing it's a little bit nuanced, but it's important to understand is that our license are for digital asset securities, right? A digital asset security is both what a lot of people would consider virtual currency x Bitcoin, which we basically consider investment contracts, which is a qualification type of security. But it also includes any sort of 33 Act security, which includes equity, debt, options, structured products. And that's that tokenization side. So you could service both sides there. You could service both the virtual currency, which we view as investment contract digital asset securities, but also sort of any sort of security issued and transferred on a blockchain, which is basically the entire tokenization universe. So it's really expansive. And I think that is why I think we have the potential to disrupt a lot of sort of different parts of the market.
Now you mentioned, and Aaron, we're going to talk a bit about this. You mentioned digital asset securities. A lot of people in the crypto industry disagree with you on that, right? But your Ethereum custody launch, are you treating Ethereum as a security? Are you viewing it as a security or a commodity similar to Bitcoin?
So, it's an important question. And honestly, we're super excited to roll out our Ethereum custody launch because it's a pivotal moment, not only for Prometheum, but I think for the broader industry. So as I mentioned, the expansive nature of our digital asset securities license, and that basically means we can handle investment contracts, which are digital asset securities, and we can offer services that are internal to assets that our internal compliance team is confident is a security. And basically, we are confident in this case, and for these purposes, we started with Ethereum. Now, but looking at the bigger picture, like Prometheum, in some sense, is doing something that's never been done before. And by doing with ETH, the most popular token besides for Bitcoin, which is obviously Bitcoin is a security, as the SEC and other regulated entities have said. But basically what we do is we hope to establish that the existing federal securities laws are applicable to most digital assets and investors can safely engage with them under existing regulatory frameworks. And sort of this is significant for I'm sorry, go ahead. There's a lot. So
No, you mentioned Bitcoin as a security, but I thought even Chair Gensler.
No, Bitcoin's not a security.
Oh, okay.
Bitcoin's the only one that's not a security, but and then it's like the question, what happens with everything else? Right? But the origination and the inception of Bitcoin, it followed a different model than almost every other asset thereafter. Right. So I think that's a distinguishing point. And while in theory you could technically and from a operational standpoint handle Bitcoin, whatever the regulators say, we try to follow. So everything else besides for that is potentially open business.
So Aaron, I mean, I think it in a sense, because you have this license, regardless of if something's a security or not, you have the ability to custody securities. So right now you could list a lot of cryptocurrencies if you want, right? Because you have that license. Is that correct? Am I off base there?
Yeah, no, we view the majority of the highest volume of traded assets as digital asset securities when it comes to virtual currency. And honestly, we intend to make them available as quickly as possible because you want to be able to support the largest and most liquid tokens. And we start off with number 2. And while our initial focus is on this investment contract digital assets, what some people would say crypto, the next step, which we really think will drive future growth, is the tokenization side. And as I mentioned before, that basically means securities issued and transferred on a blockchain. And, while, as you mentioned before with Larry Fink, there's a lot of discussion about tokenization being the next big thing in finance, a quadrillion-dollar market. That's actually a real term. But essentially, in order for that market to be empowered, you need that infrastructure, and that's the infrastructure we've created. So basically, we believe that we can empower that discussion that Mr. Fink had mentioned.
What are your thoughts on, you mentioned like you did number 2, which is Ethereum. And as you go down that list, you have, for example, XRP, and you had that ruling in the case. We know the case between the SEC and Ripple is not fully concluded. That's still, I think there's a trial in April, but the judge ruled that XRP intrinsically is not a security. It depends on the scenario of how it's offered up. Would Prometheum be looking to add XRP as an asset that you would support?
It would depend how the measure played out in court. Obviously, there's a lot going on in the courts, and that will play out in time. But the way we viewed it is that what you're trying to do is just provide an ecosystem under established regulatory framework to allow the public to participate in the space. And what we saw in the events historically, particularly, we're moving away from 2022, but essentially, you need to have frameworks, you need to have oversight, you need to have the ongoing reporting requirements, and you need to make sure that, when people participate in the space, they are able to do so, and that they're going to make or lose money based on their own investment decisions, and not because of the malfeasance of the underlying platform. So I feel like it provides just a mechanism by which that could occur. And it's not easy to get regulated under the securities law. It's a much harder approach. It's much more difficult because in one sense, you're innovating by combining the two in some capacity. But beyond that, you have to go through the process. You have to go through the regulatory process. And while it's taken us a long time, we started in 2017, I think that by putting in the effort, it'll actually allow for the innovation in markets people have been discussing about for a long time.
Now, are you servicing just primarily institutions, or are you looking to have a retail product? And I apologize if I missed that in doing my research, but what's your plans as far as servicing different types of clients?
So our licenses allow for both institutional and retail. Okay. The idea is to create a public market trading and custodial infrastructure for digital asset securities. Because if you think about it, if it's not a public market, it's basically just matching illiquid shares, stocks, tokens, whatever you want to say, between a buyer and seller. And usually what happens in our space when that occurs in, any sort of licensed digital asset security ATS right now, they do trading at one place and they do clearance and settlement at another. And basically they do it offline. It's almost like an OTC trade. And while that is definitely a step forward from what had occurred previously in that, there was no digital asset securities ATSs, the goal for us is real trading, depth of market, actual liquidity. And what that requires is both institutional and retail participation.
And what's on your roadmap for 2024? Obviously, huge launch, right? With the Ethereum custody launch. Anything that you can tell us that may be down the line later this year?
Yes. First, it's custody. ETH will be the first asset that we are custodying. And then after is obviously adding additional assets, because you want to be able to support the most liquid and, largest volume tokens. But beyond that, the next step is trading. First institutional and then retail, because you want to create this end-to-end blockchain-enabled infrastructure for trading, clearance, settlement, and custody of digital asset securities. And when you think about it, it really is, it has the potential to change a lot, because you're going to have the potential to change the thoughts or how certain processes are done with virtual currency. but you also have it, or digital asset, investment contract digital asset securities. But on the other side, you have traditional markets. And basically the goal of traditional markets, I said before, the holy grail is instantaneous settlement. And that's what we built in some capacity. Is basically a blockchain-enabled infrastructure that integrates the benefits of digital asset architecture into markets to basically create a better apple cart. So you have the potential to disrupt both the virtual currency side and the traditional market side, which is pretty cool.
And are you just servicing the US market, or are you also servicing countries outside the US?
American born and bred. So basically,
Would you have
now
plans eventually to go global? I mean,
so it's an interesting question if you think about, like, I'm trained in American securities laws, right? Our bread and butter is American securities laws. So the first step, which was a very high bar, is America. And we've seen a lot of companies basically say, oh, it can't be done in America. Let's go to Singapore. Let's go outside the United States. Let's go to the EU, right? But American capital markets are the leading capital markets of the world. And I think that's why, beyond that being our expertise, that's the area we know, and that's the area we wanted to focus on. Now, once we're able to get everything going here, obviously the goal, which has a lot of possibility, sort of compared to how traditional markets are done, is the internationalization of markets. Mm-hmm. So in theory, if you had different sort of entities or partners licensed under the different securities laws in arguably common law based countries, and which includes a lot of countries, it includes the UK, it includes Singapore, it includes Australia, it potentially could include places like Japan and the like. What you could have is really an internationalized system where you're able to connect the buyers and sellers of digital assets under the securities laws, have all the AML, KYC, et cetera. And, that would be awesome.
Mm-hmm. And tell us about your custody platform. Is it your proprietary custodial service, or are you like using like an Anchorage or a BitGo or I don't know, a BNY Mellon or something like that?
No, we basically, the special purpose broker dealer release came out in Christmas 2020. It was called the Christmas release. And as soon as that came out, we just put our heads down. Essentially, we were like, okay, you need to build custom almost everything in order to get approved for this license. I mean, you have to build your own technology, you have to build your own operations, your own compliance procedures, et cetera, et cetera, et cetera. And the reason for that is it's never been done before. So I don't think you could take a white labeled product and potentially get a SPVD license with that. You have to basically build your technology within the four corners of the regulation to make sure that essentially you are complying with how everything's meant to be, meaning the rules attendant to digital asset securities under the SPVD release create specific parameters that you have to meet in every level in order to obtain that license. And historically, what happened in the space is, there were different standards. It said, everyone built their own custody solution, right? But you get licensed here, you get licensed here, whether it's the New York DFS or whether you get licensed in different states or in different places. And it became a question of best practices, maybe, and how you think these standards and like different standards for custody. And what we saw recently was the introduction to the potential change to the custody rule, such that investment advisors have to hold their assets crypto assets on behalf of clients at a qualified custodian. Now, it gets really technical, but essentially the idea here is to create high-level standards for all custodians to be able to meet in order to ensure that the public is protected. So we had to build our own technology to basically and do everything from scratch in order to make sure we met those standards.
And with the Ethereum custody you're providing, are you going to be able to offer staking to your clients or not at this time?
Oh, interesting question. So we've seen regulatory actions which arguably show that staking as a service related activity implicates the securities laws. Right? A lot of the different platforms have had to change or sort of stop doing how they were staking as a service. We have a lot to do, but obviously we've considered the different lines of business under the securities laws. But as I mentioned, for 2024, it's custody launch, then trading, and we could go from there.
Got it. Yeah, I know the staking situation is tricky. So, Aaron, I'm going to ask you some tough questions, right? Because there's it seems to be a dichotomy between what you're doing at Prometheum and the rest of the crypto industry. The rest of the folks have gotten Wells notices. We've got lawsuits. You know, for example, look at a lot of these cryptocurrencies as digital asset securities. Other folks do not. There's some of this playing out in the courts. Congress is involved with certain conversations with Chair Gensler, and is regulations being worked on. What is your take on the dichotomy and how this is playing out? And look, it is an election year. I know this is a packed question I'm asking you here. Chair Gensler may not be around if Biden loses, right? So, what is your take on this entire situation? Hi, everyone. Pardon the interruption. I'm Tony Edward, the founder and host of the Thinking Crypto podcast. I have a huge favor to ask you. If you haven't subscribed as yet on YouTube or the podcast platforms, hit that subscribe button, hit the thumbs up button, hit the notification bell on the YouTube platform, and on Spotify or Apple or wherever you get your podcasts, please leave a 5-star rating and review. It supports the podcast. It allows me to bring great quality content to you. Thank you for your support, and I'll let you get back to the content.
Who's ever the chairperson of the SEC, whatever the regulations are, will follow. When we started, it was when Clayton was the chairperson of the SEC.
Right.
And he was a Trump appointee. And essentially, he was the one who came out with the special purpose broker-dealer release. So, whatever the regulators say, our whole position has been, we'll follow it. That's why it has taken us arguably a long time, because regulations weren't clear. And, you have to work with the powers that, the actual regulators, in order to make sure you obtain the licenses if your belief is that's the way to do it compliantly. So, who knows which way the wind blows, but whichever way it blows, it usually carries the plane with it.
Aaron, what do you think about under Jay Clayton with Bill Hinman? Bill Hinman gave a speech, Jay Clayton endorsed it, of Ethereum not being a security. That seems to still be holding up to this day. However, Chair Gensler has not reiterated the statements. I know you just said, look, it just depends on the way the regulations go. But what are your thoughts on Ethereum not being a security and Bill Hinman and Jay Clayton's statements?
So, the Hinman statements were definitely interesting. And you can make different arguments about it. I mean, the way we see it is that if you're going to follow Hinman's statement, who's not a commissioner, you would follow the commissioner's statement before you would follow one of his subordinate statements. And Chairman Gensler has said, basically, he views the overwhelming majority of digital assets of our securities besides for Bitcoin. So we understand that Hinman's statement was out there, but I think it was almost like a head fake. Right. In some sense, it could be a disservice to the industry, because I believe if you look at the emails in one of the cases, there's certain people, in terms of the internal emails of the SEC, are saying, hey, what you're saying is outside of what we believe. So I think if you look at that from that sense, it might have done more harm than good.
Sure. Yeah.
By sort of deking people out, you make people zag when they should zig. And now they've doubled and tripled down on certain sort of viewpoints and certain theses that weren't necessarily going to play out in the long term.
So it seemed like Jay Clayton and Bill Hinman screwed up there with this. It caused more confusion in the market. And
I don't know if it was Jay Clayton, though. To my understanding, I don't know if it was Commissioner Clayton. To my understanding, at least from what the emails say in terms of the public emails from the cases, I don't know if it was I don't think it was a top-down directive. I think it might have been a viewpoint of Hinman that was outside of the consensus viewpoint of the regulator.
The thing is, though, I've seen videos of Chair Clayton. At that time, he was endorsing. He's like, "Hey, check out Bill Hinman's speech." So I get what you're saying. It just seems like the chair stamped his stamp of approval. despite him not being the originator of this. I know there's other talks of conflicts and things like that. I don't know if you're aware of these things of Bill Hinman and look, and maybe
I've
to
never
what
seen
you.
the emails. I read them.
Mhm.
No, I say like, that's not for me to really. I don't know. Like, I understand that, like, if there's conflicts, there's conflicts, and that's interesting.
Mm. Yeah, look, at the end of the day, I'm hoping we can get clear regulations from Congress. They make the laws, right? And we can put some things in order, and the SEC, the CFTC, and whoever they do their part, and we can move forward. But right now, there's just a lot of ambiguity and confusion, and hopefully, we can get these things cleared up. Um,
Tony, can I comment quickly on potential for new regulation? So, like,
mhm.
there's been a discussion for a long time about regulatory clarity, and it's in the best interest of everyone. Basically, there's a path. Let's just figure it out. Let's move forward.
Mm.
But I think people are waiting for a new president and therefore a potentially new potential chairperson of the SEC, or they're waiting for new legislation, which, depending on how you view it, I think McHenry has said he's going to, was it leave Congress by the end of the year,
Yeah.
and with the market infrastructure bill. So what are we doing? We're waiting at least a 15 months or so. But I think by actually custodying ETH under the securities laws, you're arguably moving the conversation forward. We don't have to wait 15, 18 months, however long it takes to get regulatory clarity. And if you see Congress, like, let's make sure first they fund the government before they're not going to be focusing on crypto legislation before they focus on the government. And in a split House and Senate, I think we're going to wait for regulatory clarity if that's your viewpoint. But by what Prometheum is going to be doing when we custody through Prometheum Capital ETH, I think you're moving the conversation forward. You're
Mm.
basically saying, hey, like, these assets could be handled, treated, and traded and custodied under the securities laws. And while the securities laws might not be perfect for certain elements of digital assets, they are arguably the best framework we've had. They've allowed American capital markets to flourish. They basically allowed us, we have the most vibrant and arguably the best capital markets in the world. And the reason is because we have integrity in our markets. And what we saw in the events of 2022 is when you don't have integrity, you lose the faith of the public, you make institutions not want to participate in the space. So if you're trying to achieve both those goals, basically use the best framework you have.
Yeah. And so do you think crypto regulations are like maybe 2 years out? Maybe it's 2025 or 2026?
I don't know if you'll see any sort of comprehensive crypto regulation. Like, you can make arguments for certain areas about it. Maybe when it comes to stable coins,
Hmm.
those pose different systemic risks than I maybe have been historically considered.
Yeah.
But when you look at the sort of the investment side of digital assets, meaning people who are trading, people who want to custody those assets, and basically the methodology by which people are sort of interacting with the Web3 space, I don't know if there's a need to recreate the wheel. Like, the securities laws have disclosure requirements on the investor protection side. They have fair and orderly market requirements, which are meant to prevent manipulation on the trading side. And they have specific rules for clearance, settlement, and custody, such that customers' assets are segregated from that of the institution. Not just that, they force those places to go and report and file reports and have ongoing oversight and examinations. So you basically ensure that those standards are being enforced.
Hmm.
So I guess my viewpoint there is that I don't think you need to recreate the wheel.
Hmm. Now, and I have some awkward questions to ask you. And a lot of these things have been talked about by various folks. I think you testified before Congress. We had congressmen ask you certain questions. So I have to ask. And there's talks of Prometheum having deep ties to the CCP. Um, do you have relationships with Wang, Dongfeng, and Longling Capital? And what ties, and are they invested in Prometheum, and what can you tell us there?
The two people you mentioned, I have no idea who they are.
Mm.
I've never met them, never spoken. In regards to ties to CCP, I understand that there's concern there. And the reason that there's concern is because when you're building market infrastructure, it's a matter of national security.
Mm.
So I totally get it. And believe me, markets are very important to America. When you look at America as opposed to places like China, Americans invest a significant part of their liquid capital in markets. So they have a lot of wealth there, right? So it's really a matter of national security. So in terms of like what happened historically, so as a young company in, I think 2018, we took an investment from a company, a Hong Kong company called Hashkey, which was owned as a subsidiary of Wanxiang, Wanxiang, I believe. And the idea was we take an investment and we're going to co-develop. And we're going to co-develop this market infrastructure, right? Don't forget, this is a different time. It's before sort of the decoupling between America and China, right? But you can start to see the way the wind's blowing maybe a year later. And beyond that, we realized that this is not a viable approach. So within a year, 18 months, something like that thereafter, we basically abrogate that agreement. We basically have a contractual agreement that we're done with this. You're no longer going to do this. And we take everything in-house. And not just in-house, but everything with American developers, meaning people here on an H-1B visa or based in America, besides our CTO who's in the Isle of Man. So that's just, one little qualification. And we do everything internally. And beyond that, we are in a position that, this is what we think is the best way forward, because as you're building something that becomes more real, it's better for America, it's better for the company, it's better for everything going forward. And then thereafter, we basically also start to get letters, meaning we have a inquiry from the CFIUS, which is the Committee for Foreign Investment in the United States, which is basically meant to make sure that foreign entities don't have power over companies or sort of, important national security type companies, right? We submit everything they ask. There's no issues there, right? Not just that, we get a full-on investigation by the SEC. Right? A formal inquiry. We basically submit everything that they ask, and that inquiry was closed. So if you look at it, you could make an argument that we're one of the most investigated companies in that sense to make sure we don't have ties. And if you extrapolate from there, it'd be interesting to see what other companies were like. So it's like, I understand the concern. It's definitely a matter of national security. We take the exact same view. Everything we create is our own. All our code is our own. We are not dependent at all. Essentially, Hashkey Wanxiang own as an equity investor a percentage of the company, not where close to a majority. And basically, they have the same rights as every other investor.
Got it. So you guys, like you said, went through the regulatory scrutiny. All these things have been checked. I know, like you said, you testified for Congress on these things. So there's no need for people to be concerned with data and control and so forth. Like you said, they're not a majority shareholder and so forth.
No, listen, I firmly agree with that. I mean, when you look at social media, you can make weird arguments there. If you get what I'm saying. And it's interesting.
Now, I believe you answered this question on another podcast, but folks seem to think that you're getting special favor from the SEC, that maybe someone at the SEC or you're friends with Gary Gensler or something. Another awkward question, but what can you say about that in your relationship with SEC officials?
So I saw one of the rumors that I think Chairman Gensler's my uncle, maybe. That was a funny one. Because we look so alike. but essentially, like, listen, I get it. People have been spending a long time trying to figure out how to be compliant under the securities laws. And I think we were in a unique position because it was always our thesis since we started in the first no action letter in 2014, basically, that this federal securities laws were what we thought were the best framework to regulate the activities in the space, meaning the intermediaries, the trading, clearance, settlement, custody, right, to ensure that investors are protected. And when the regulation came out, this SPBD release came out, I believe in December 2020, we basically thought, hell yeah. Because we were doing the ATS the goal was public trading through an ATS for digital assets, right? Digital asset securities. But in order for that actually to occur, you need to be able to do what happens after the trade is made, do clearance, settlement, and custody. So when the SPBD release came out, we're like, oh, this is how you do the rest. This is the regulation by which you do the rest. So it comes out in December 2020, and there's a comment period, which we submitted a public comment, and it's adopted into the Federal Register in April 2021, which is actually means it's a law in the United States. And we basically were super excited about this, and we put our head down. We basically spent over a year, putting together all the operations, the compliance procedures, building the technology as specifically laid out in the four corners of the regulation, basically doing everything that was necessary to get approved, right? The goal was to become the first special purpose broker-dealer. Now, during that time, we did not focus on revenues. We did not focus on generating cash from virtual currency related activity, because we just didn't think that was the best way to do it. And other companies, I think, were basically focused on generating revenues. They had operational businesses. They're basically doing those activities. And I don't know if as much energy or effort was focused on those activities under the securities laws. But in light of what happened with FTX in 2022, what you see is basically, it's like an oh snap moment. Like everyone realizes in order for this industry to move forward, there needs to be, oversight. There needs to be proper frameworks. There needs to be a place that allows both institutions to feel comfortable participating in the space from a compliance and regulatory perspective, but also will make sure retail investors don't get left holding the bag.
For sure. Yeah.
And so when we initially started to tell people we were doing this, they would laugh at us. They would literally scoff at us. So I think by putting our head down and working hard, we put together an application process that took us, 13 months. I think it's overall the approval process between custody, clearance, and settlement took us something like 30 months. Now, so I understand that while we have a different viewpoint than most other people and the way that they've seen it historically, the fact that we were first to be approved is, I think, more representative of the efforts of the team and not any sort of special treatment. I mean, I've never met or spoken to Gary Gensler.
What were your thoughts on the Bitcoin spot ETF launch, and also the context to that Grayscale had to win an appeal for this? And, we were talking about Bitcoin being not a security, but yet the SEC did not want to approve these spot ETFs. But what are your thoughts on the launch?
So the spot ETF was a good step forward for the industry because it provided a mechanism by which institutions could compliantly generate revenues in the space. And what we've all want is more institutional participation. We basically, I think everyone, maybe not everyone, but the overall majority of the industry thinks that institutional participation is great. And what we saw in light of the events of 2022 was a lot of the institutions sort of like, who were considering getting to the space because they saw the big monies being made, they were like, we can't do this. They pulled back because from a compliance and regulatory perspective, by getting into a new industry, you can't jeopardize your cash cows, right? But by issuing the Bitcoin ETF, basically it's a compliant mechanism by which they can participate in the space. But the issue is while it's a step forward, it's a 20th century securities wrapper around a 21st century asset. You have a 20th century securities wrapper, I mean the ETF, which is off-chain, around the underlying, which is Bitcoin, which is a 21st century asset, right? And we think the next step is actually on-chain ETFs, on-chain structured products, and that'll be a major step forward, because basically what that will allow is significant institutional participation, and also it'll allow for innovative assets to be created. By issuing, let's say, a ETF which represents 5 tokens on chain, you could, via smart contract, you can actually see what's in that smart contract. You could prove the underlying. Like it's the next step after that. And the reason that's important is because that's really what Prometheum ecosystem empowers. In order for structured products, on-chain structured products to be empowered, you need to have the ability for there to be a trading venue, for there to be a custodial venue, and for that asset to be cleared and settled, which will actually then allow for public trading of that asset, right? And really empowering it, right? And that's what Prometheum has created. So in that essence, I think we can be a major player in empowering the next generation of ETFs, meaning on-chain structured products, on-chain ETFs, ETPs.
That's fascinating. And that's the first time I've heard of that, ETFs on-chain. And so I have a couple of questions for that. Are you currently working on that product, and what's the timeline for the launch of that?
So, there's so many different things you could do.
Mhm.
Like in theory, you were talking about, staking as a service before. You're talking now about ETFs. Now, we are the infrastructure that can allow for, once that product's created, for it to actually be used in a distributed architecture, actually used as a 21st century asset, actually empower that, meaning allow it to be traded publicly, cleared, settled, in custody.
Mhm.
And um, without giving too much specifics, obviously, we're working with different people out there to ensure that that next generation of ETFs could occur. And I think that's where we'll see the real innovation.
I know you probably can't give names, but is it a Wall Street firm? Can you give us that much?
Yeah. Like it's there's major asset issuers
Okay.
who are thinking and who are thinking about it differently. Like I think the first step was this, the backlog of these Bitcoin ETFs,
Mhm.
right? And it's a different type of consideration because you could say, well, Bitcoin's out of security, no problem. So if you think about it now, like you have the virtual currency licensed custodians, state custodians, who are custodying the underlying, but they can't custody the security, meaning the ETF itself,
Mhm.
because it's a security. But once you, in theory, if you're able to do it on the Prometheum ecosystem, you can custody both.
So,
Because if let's look at it this way. Oh, go ahead. Sorry, go ahead.
no, no,
No,
go
because
ahead.
if
Sorry.
you're treating Ethereum as a security, and there's a structured product ETF created on top of that, which is also a security, you have to be able to custody it at a digital asset securities like licensed ecosystem. And the reason that's sort of like it's nuanced, but it's important is because the way that the licensing has worked on the security side is that they've bifurcated, I mean, they've split traditional securities, right, which is basically securities issued via transfer agent. It's not the best explanation, but the simplest, versus digital asset securities. And a digital asset security under the legislate or under the definition of the rule is basically a security issued and transferred on chain,
Mhm.
right? So you basically have to have the licenses specifically for trading, clearance, settlement, and custody of digital asset securities. Not you can't be a traditional clearing firm, you can't be a traditional ATS to be able to do these things.
Mhm.
So we have those licenses, which I think that with Prometheum ATS and Prometheum Capital, which I think then really allows that empowerment to occur.
The question for you, and this is more on the macro level. To your point, like we're using a 20th century wrapper for a 21st century asset, but is it a necessary, I don't want to use the word evil, but a necessary thing right now for the adoption of crypto because the wallets and the ease of use for the next billion users is not there yet. It's not simple. It's a bit intimidating. It's a bit scary, right? That we need to go out, kind of boomerang out this way, but it's going to come back to on chain to be more decentralized. I hope I'm
No, I get what you're
summarizing.
saying.
Yeah.
No, it makes a lot of sense. So like the way that we sort of deal with this, because it's obviously a problem, is that basically when you come to our ecosystem, right? If you want to create an account, you're creating a brokerage account. Now, your brokerage account represents the wallet holdings, right? Is actually, but it's just basically creating a brokerage account. And the overwhelming majority of the American public who is, investing is familiar with brokerage accounts.
Yeah. Mhm.
So it's not like you have to boomerang around. Basically, you from both a regulatory standpoint and probably from like a operational easy use standpoint, you have to use these traditional mechanisms in order to make sure you have your AML, KYC, everything that's done, and basically you have all the information, suitability, et cetera, for the customer, right? But basically, by doing it that way, you eliminate that barrier. You don't say, oh, oh, there's so many technical requirements. Let me go get my Ledger wallet. Let me go figure out these things that I have no idea what I'm doing.
Right.
No, you don't have to do that. You come, you create a brokerage account, and then you go participate in the space like you would through traditional assets here.
Mhm. Yeah. And I'm hoping that, maybe within the next 5 years, to what you're saying, we would boomerang back to on chain. A lot of these products will go back on chain. And because I feel I'm kind of struggling with it, but where I believe in self custody, I'm an early adopter and I believe in what crypto and Bitcoin and all these things offer, but it's becoming more financialized and by Wall Street and TradFi, where it's taking away some of the benefits. So hopefully that could come back.
So it's very interesting because it's like there's no free lunch in life. So people want institutional participation, they want broader adoption. But in order for that to occur, you have to have certain, I'm going to say not compromises, but certain sort of understanding of how things are done in a more mainstream sense.
Yeah, for sure.
And by integrating and conflating both those, hopefully you get the benefits of both those worlds.
Now the Bitcoin ETFs are live. There's talks of an Ethereum spot ETF. Larry Fink wants it. I've seen him talk about it. Other Wall Street firms as well. Do you think we see that approval this year?
It'll be interesting to see how it plays out. It's not my area of expertise in terms of like predicting when ETFs get approved. Like the creation of ETFs and origination of products is a bit different than the infrastructure needed for allow those sort of products to then thereafter be able to trade, clear, settle, and custody. And we'll see what happens over time. Overall, though, I think what's important is you're seeing this trend twofold of larger institutional participation, which is what a lot of people are waiting for, and also a focus on tokenization. And Prometheum's ecosystem through Prometheum ATS and Prometheum Capital is really empowers tokenization and will allow those institutions who are looking to participate in the space to be able to do something with the assets they create. And having liquidity, having public market trading, and having basically the ability to allow investors, both retail and institutional, participate in that with that asset, really empowers how that token can function going forward.
Let's talk stablecoins. We have the largest stablecoin in the market is Tether. In the United States, you have Circle's USD. You have PayPal launching a stablecoin, and it seems like everybody and their grandma is going to launch one, right? And they're going to use it for different ways. JP Morgan has JPM coin, but that's interbank settlement. And there's talks of stablecoin regulations. The SEC has come out and say the way stablecoins are offered, I believe, if you're getting interest and so forth, is a security offering. What is your thoughts on the stablecoin market, and then how will Prometheum be supporting different stablecoins?
Stablecoins are very, very, very interesting, and definitely one of the innovative areas within the space. I think the lessons have been learned related to algorithmic stablecoins, but also it's not just that the lessons have been learned. The potential risk and systemic risk attendant to stablecoins has been acknowledged. Because what we saw with Lunatero is like, okay, like this is separated from the US market, but the more it's integrated with larger institutions, it could have a knock-on effect. And there's a balance between allowing the innovation attendant to stablecoins to occur while making sure to really limit any sort of systemic risk. And I think that'll be, if anywhere there's legislation, you'll probably see it there, and that'll be in order to sort of play those things together.
Are you guys planning to support stable coins in any way? I mean, even as just as a trading pair or whatever it may be.
So we use USD on the cash side.
Okay. So
it's just in our opinion, it's a method by which you don't have necessarily conversions when it comes to fees by going in and out of the cash side. And what we saw, like, maybe it's like 18 months ago now, is when a stablecoin loses its peg, it has potential major risks. Because think about it, you have a customer on your platform. They think they have $10,000 in cash, right? The stablecoin goes to 82 cents on the dollar, and now you have $8,200 in cash. But you had $10,000 in cash. Whose fault is that? Is that the platform's fault? Is it the holder of the stablecoin's fault? And if you're on a platform that just makes you use stablecoins, now you're taking on the additional risk there. Like we talk about wanting this next billion customers to get into the space. If that occurs and everyone's using stablecoins and there's a depegging, you'll lose those billion customers, or they'll be harder to get the next billion customers after that.
Yeah, agreed. Yeah, I mean, look, there's still a lot of things that have to be figured out for sure. And I agree with you there because that would be horrendous to have the average Joe and Jane come in, they use stablecoins, and like you said, they're losing money because of the peg, and many of them won't even understand what the hell happened, right? So that would
They
be,
would think they were scammed.
yeah,
They would think it was a scam, and then they would lose faith in the space.
yeah. Um, Crypto bull market seems to be heating up. 4-year cycles playing out. We've seen that Bitcoin and crypto has been correlated to global liquidity, stock market. What is your outlook? I don't know if you can give price predictions for Bitcoin, but what is your outlook over the next year and a half?
Uh, It's it's really nice to see the attention coming back to the space. I think certain pundits had written off the space after the 2022 cycle, but the reality is there's a lot of technology which could be integrated into larger markets to basically, from a distributed architecture standpoint, which should really allow for continued growth in 2024. Now, I'm specifically referring to tokenization. And if you believe all the major pundits out there who say tokenization is, the biggest thing that happens when it comes to markets, particularly securities, you basically will see, I think, a lot of activity there, which should, create more interest in the overall digital asset market. And again, I think one of the things that people think about is, okay, well, these major institutions, whether it's Franklin Templeton with the Benji or SocGen with their green bond, are issuing these assets. They're into the space. They're understanding it. They're participating in the space. But in order for that leap of growth, that sort of exponential growth to occur, you need to be able to do something with those assets once they're created. And that's the ecosystem Prometheum's created. We basically created an ecosystem that allows those assets, basically digital asset securities, which includes tokenization and both digital asset securities that are investment contracts, meaning what people call virtual currency besides for Bitcoin, to be able to be traded, cleared, settled, and custodied under the securities laws, which will therefore allow real public markets to develop. So I think that we'll see continued, positivity in the space, particularly as institutions now have a compliant mechanism by which they can participate in the space through ecosystems like Prometheum, which will then also allow those assets that they create to be empowered thereafter by actually being able to publicly trade them and clear, settle, and custody them.
Final question here, and then we'll hit the wrap-up questions. What are your thoughts on CBDCs, central bank digital currencies? There's certainly a lot of benefits as we're heading more into the digital world, with tokens and assets running on the blockchain, but many are concerned with privacy and that these CBDCs could be used for draconian ideals by certain governments and so forth. I'm not necessarily saying that in the United States, but what is your thoughts on these things?
There's a constant struggle in the CBDC space between the potential innovation and benefits of moving cash on chain and the potential Orwellian consequences. Now, like, the question is, how do you sort of balance the AML KYC considerations with the zero knowledge proof considerations? I don't it's not a question of doing anything bad. It's a question of should the government be able to see every one of your transactions?
Yeah.
And know both counterparties on that? It's a big consideration.
Yeah.
And and on the other side of that, you say, hey, but you can't be creating new ecosystems that are used for funding nefarious activities. And how do you prevent that on the entry side? So it's a weird balance there, and I think it'll play out. It's a little bit easier to do a CBDC, in my opinion, when you're, a country of 5 million people or when you're an authoritarian country. And hopefully in the United States, they'll be able to find that balance there.
Yeah. My hope is that the government here in the United States, they lean towards more a stable coin, and not necessarily a CBDC. Maybe it's adopting USDC. I don't know.
But then there's also systemic risk there, because what happens if the stable coin side, and then is the government guaranteeing that stablecoin with the full faith and credit of the government? It's weird because like the cash is like USD is USD, but there's a layer of abstraction which becomes the stablecoin, and then there's an entity running that layer of abstraction. But when that asset goes awry, if it's on the government to like backstop, I don't know if that it sort of loses its potency in some sense.
Yeah, it's a lot of these things are TBD. I know like Circle, they have T-bills as part of their reserves. So I don't know. At this point, it's a lot of speculation, but I think you bring up some valid points. We'll have to wait and see. But my hope is whatever they put together and put out there, it aligns with the U.S. Constitution at least, and maintains some of our rights at least. Um, all right, I got some wrap-up questions here for you. First, if you could create your own metaverse, what would the theme be?
Shinichiro Watanabe. He's the guy, the anime director who directed Cowboy Bebop, Samurai Champloo, Michiko Hatchkin, Space Dandy. It's like he's directed a lot of the like best anime that are out there, and I think there's different styles and different motifs there. Samurai Champloo has a Edo period samurai concept with a gangster rap motif.
Hmm.
So it's pretty interesting there. And Cowboy Bebop has both a space cowboy concept with a like experimental jazz. So you have a lot of different concepts there, all that seem to flow together. So that's what I would choose.
And rapid fire questions. Favorite food,
Pizza.
favorite musician or band,
Mac Miller.
favorite movie,
That's interesting. King of New York.
favorite book.
How to Win Friends and Influence People. No, I'm joking. No, it's Don Quixote.
And when you're not working at Prometheum, what are you doing for fun as a hobby?
I like to do yoga.
Aaron, thank you for taking the time. Thank you for going beyond our scheduled time. Appreciate all the answers, insights, and so forth. Thank you for joining me.
Thank you for the opportunity, Tony.